Hi everybody, Alex Deployer from Expert Forex, and I hope this video gives you lots of money-making Forex trading ideas. In today's video, I'm going to be talking about Forex spreads. And many traders regard Forex spread as an uncontrollable fact of trading, and many are just blissfully unaware of what is actually happening to Forex spreads. So in this video, hopefully I can make you aware of what is actually going on your Forex broker account, and also give you a tool that will help you monitor this activity. It is a free tool and essential if you are going to be trading the Forex market as an EA trader especially, or as a manual trader. So my suggestion is don't place another Forex trade until you know the truth behind broker spreads and you have done your homework regarding your broker's spreads and alternative broker spreads. The days of saying my broker charges me 2 pips for the Euro USD are far gone. 2 pips might be what's stated on their website. 2 pips might be what you see when you're trading, but in reality you will see that that's not the spread that you are being exposed to. So in this video we're going to look at why it is so difficult to measure spreads. They're difficult to find. Some people don't know how to find spreads, the initial spreads in the first place. And I'm going to show you how to find them and measure the spreads. Then we're going to have a look at a free tool that not only measures the spread at the moment when you're trading, but keeps a record of how high the spread has been, what the average spread has been, that type of thing. Now that's the kind of history you really need, and it is extremely useful because you can gauge the volatility of your broker's spread charging, and also if something untoward has happened, you now have the ability to tell him, look, I've been monitoring my spread, look what's happened here, tell me what's happened. And in fact this week I had a trader whose deal was reversed because of a spike in spread charges that he could prove. Then we're going to look at how high your spreads can jump without you knowing it. The last 24 hours has been quite volatile in terms of spreads, but if you look at the charts, if you look at your account, you might not even know what has happened. Then we're going to have a look at when spread jumps occur and what you are really paying in spread. And then we're going to have a look at how spread volatility differs from broker to broker and how you can compare broker spreads on a realistic basis. Now I normally ask this at the end of the video, but this is an incredibly important topic which I feel quite passionate about. And if you realize the importance of what I'm going to be showing you to Forex trading, please share this video. Don't just like it, share it with fellow traders so that they're aware of what's going on. Okay, so let's look at the problem of why it's so difficult to find the spread. Normally when you enter a deal, the spread is shown as a buy value and a sell value, and the difference is the spread. And a lot of brokers don't actually show you the difference. You've got to mentally calculate the spread at the time, and it does change very rapidly, so it is a bit of a problem. If you look at your market watch, it shows the bid price and the ask price, and there is a column for the spread there. Very few platforms activate this column, so a lot of people don't even know about it. What you need to do is you have to go to the headings, right click, and then select that column to be displayed, and it will display the spreads at the time. The spreads will be in points. And then you've got your trading block here that again doesn't show the spread, it shows the values, and you've got to quickly mentally calculate what is 19 minus 15 and work out what your spread is. So spreads are not easy to see on the MT4 platform. What I have found for you, and this is not my indicator, this is an indicator I found on the internet, quite a while ago is a free spread indicator that supplies spread information historically, and that's the big point. If you can find the current spreads, that's great, but what you actually need is the historic picture of what has happened, and this indicator does it. So for instance, here on the indicator, the pink level is the highest level of spread reached during a candle. So for instance, that is the highest level, which is in this case 4.4 pips. The stated level of spread for this particular broker is 4, so the broker is going over his stated level quite often. The blue level is just the level at which the candle opened. So you can see they open in all kinds of places. Not such great information, but I think the maximum is still the best. And then the white dots are the average for a particular candle. So you can see the average is over here, the high is over there. So the spreads reach quite different levels during the trading of a candle. The red line on the chart is something you can add to any trade. It is the buy price of the cross that you're trading. So you can see the gap between those two is the buy price. And then the light box here shows you the current spread. So the current spread is, as stated, 4, but we know it can shoot up, and this is quite a mild currency. You'll see some shockers later on to 4.4. But this indicator gives you this kind of information. Absolutely fantastic. What that then allows you to do is you can then compare brokers to brokers. So what we do is we've got 5 brokers which we monitor all the time, and there are huge differences between these brokers. For instance, broker 1, the average charge is 40 points, which is 4 pips. This broker over here has only got 3 pips at 3 points at this stage. So huge difference. You can also see the difference in the profile of how the spreads are managed. Completely different profiles, and you can see the red line here is way above the sell line, whereas here it is so close you can't see it. It's actually hidden behind so it's at the same level. There's a huge difference between how brokers not only manage their average spread, but also how much they allow spikes to happen. Then when a spike happens, like here's an example of a spike, and this is a random spike. It's just straight up and straight down, and on it went. And there's no reason for the spike, but it went up most probably 3 times the normal average level. Now, if you did not have this tool, you wouldn't even know it. It happens so fast, the human eye cannot see this spike. But with this tool, we can trace it, and as the slide says, you will never know about the spike if you did not have this spread monitor indicator. Now, this is the one that my friend used to claim back his failed trade because of a spike like this, which could not be explained by the broker. Then the other thing that we do is we monitor different currencies all the time. So we have the monitor on different currencies. I squeeze the actual chart right into the top of the chart, so you only see the indicator, and that gives me an idea of the differences, firstly, between the various currencies and the stability. And you can just look at the stability here of the trading. And you can also see, I mean, sometimes look at this particular one. New Zealand is a 32 points, whereas some of them are only 3 or 4 or 5. So there's quite a big difference between currencies. Important to have this, so we monitor that. And then you can also monitor between brokers, so you can actually see, let's see how much is the charge on the franc. Let's trade the franc on this broker. Oh, look at this broker, he's charging 43, this guy's charging 6. Definitely want to only trade the franc on this one. So you can compare currencies from broker to broker, and you know what your current level is, and you can also see the level of manipulation that each broker had. Now, there are 2 versions of this monitoring tool. There's a free version and a paid version. The free version works perfectly. It's really good. We started out with the free version. The only limitation is that you can only use it on one platform, and that is why we've gone for the paid version. So the free version gives you all that information. It gives you the highest spread, it gives you the average spread, and it gives you the level at which the candle closed. And unfortunately, you can only use it on one platform. The paid version allows you to use it on 5 platforms, so it has exactly the same as the free, but you can, if there's flexibility, you can load it onto 5 platforms, and it gives you this little block. This little block doesn't come with the free version. That shows you the current spread at the time. So I'll give you some download information for this free monitor. In general, when do these increased spreads occur? And just yesterday, there was a pound announcement which affected all the pound crosses. Strangely enough, it didn't affect any other currencies except the pound crosses. And this is what happened. I mean, in this case, it shot up dramatically to 23. That there says 23 pips from average of about 5 down here. So a huge increase prior to the announcement, but that's what happens with announcements, and we'll see. There's an example of uncertain times coming up soon, and it happens over weekends. Brokers don't want you to trade over weekends, so they increase their spreads dramatically over weekends, and times when trading is discouraged, like for instance Christmas or New Year and those kind of times, or those holidays, 4th of July, that type of thing, brokers would generally increase their spreads to discourage trading. And then the last one, at any time. Now you'll see today, any time applied very strongly. Okay, so let's have, here's an example of an anytime announcement. Now there was the pound announcement. Now that's reasonably controllable. You know it's coming, you know what's going on, and you can expect a bit of a jump. And in fact, this is in this case, the spread jumped 20 pips from its normal. But then there's the other kind of announcement, like Trump stood up and announced the China tariff increase, and the spreads jumped to 38 pips. Now 38 pips is a lot. And why did it jump so high? Because the brokers or the Forex market did not know how the market would react. There was a high level of uncertainty, and therefore, to be sure, they just increased the spreads to discourage people from trading. And also what happens then is that they also wipe out a couple of transactions at the same time. Now here's an example here where the spread actually went to 57 pips. So it jumped dramatically because of this Trump announcement. Now if you didn't have this tool, you would not know about this at all. It's not recorded anywhere, so you wouldn't know that this has happened. And you wouldn't. So here's the example. Here's the British announcement is over here, and there's the Trump, and then something happened in between. There was a small announcement in the US session. Okay, so what are your possible strategies? So you might say to me, okay, I know the spreads jumped like crazy. What can I do about it? So the first thing you can do is you can look for commission-only brokers. Now, commission-only brokers don't charge you a spread. They charge you a fixed fee per transaction, and that eliminates the risk of spread increases. Then you can look for fixed spread brokers. And I've got question marks behind them because you can look for them and see if you can find them. And if you find them, you've got more certainty. They'll charge you a little bit more, but you've got the level of certainty. You need to know the times when the spread volatility is about to happen. Some of them are predictable, like weekends and announcements and things like that, but some, like Trump standing up and saying I'm going to increase the China tariffs, are not that predictable. But here's the big one. You can be careful about your broker selection. So what we do is we've got 5 brokers, we're analyzing them, we bring on new brokers all the time, analyze them, and see which are the... Now, the smaller spread is not always the best broker to go for, because that broker is the one that will manipulate spreads and have spikes and all kinds of things. So be careful about that. So you need to do this analysis. You need to analyze any brokers that you are intending to trade with using this free tool. And then there's ways in terms of your own trading strategies. That is why we don't scalp anymore, because you can't scalp where the spreads are uncertain. The broker will just wipe you out. So that is why bigger swing trades are encouraged, or I certainly only use trades over 100 pips and that type of thing. Also, there's some techniques like the hedging techniques that trade without stops and things like that. That allows you to trade with less exposure to spread manipulation. And then obviously there are some techniques that use huge stops, and they are also less exposed to spread manipulation. And when I say manipulation, it's not always the broker that's manipulating the spread. A lot of the feeds come from the real Forex market and are based on liquidity and the conditions in the markets. Uncertain events will automatically increase the spreads. And liquidity, I don't think we've seen it yet, but when the UK and the US markets open, the spreads actually drop because there's a lot of liquidity in the market. When you move into the Asian market, the spreads actually go up because there's less liquidity in the market, and also they don't want you to necessarily trade big trades in that particular market. So actions that I would suggest is don't place any further trades until you know what your spread exposure is, until you know you've got the very best broker at the moment, until you know that your broker isn't managing the spreads excessively. And in order to do that, you need to download the free indicator, and you can use this link that's shown on the screen, expertforex.com/spread, and you will get access to that particular indicator. Then I would open demo accounts with 3 to 5 brokers. We have found that the demo accounts are more or less in line with the real accounts in terms of the spreads that are being charged, so they are representative. You can use them. And I would monitor all those brokers for a week to get a good view and profile of each particular broker, and then I would analyze the results and decide which broker is the best one to go with. Or alternatively, you can join a forum and get some other traders to share their results and then comment on their result. And there's a link to such a forum down there. Remember, all these links, there are clickable versions of these links in the description of the video. The description can be found just below the video in YouTube. Again, I must stress the importance of this activity. It is extremely important that you use a broker that you can trust in terms of spreads, and that you minimize your spreads as much as possible. You also need to adapt your trading techniques to have less exposure to spreads. And you also have to continuously monitor the spreads that you are being charged, because if you do get stopped out for some unknown reason and there has been a spike in the spreads, you can phone your broker up and say, hey mate, I've been monitoring my spreads and suddenly it went from 4 to 20. Tell me what happened there. And often the broker will say, sorry, that was a spike in our data feed. I will cancel your transaction. So this is going to save you lots and lots of money in all future Forex trading activities.
Thanks for watching this video. If you've liked it, please give it a like. If you haven't subscribed yet, subscribe and click the bell. But most importantly, share this video. You can do this in many ways. Message your friends, send them emails, or share it on social media, on Facebook, on Twitter, and those kind of places. So from me, Alex Deploy, cheerio.